Hi, I'm E.B. Tucker, Director of Metalla Royalty and Streaming. 4 years ago at this exact same conference, I gave a breakout session where I talked about an exciting new opportunity in the royalty business. People that listened to that presentation and took that advice had the chance to get in on an exciting new company for about $1.20 a share that today is priced around $7.50 a share. And it wasn't just something for the wealthiest people in the room and million-dollar investors. This was a stock that you could buy in the market for several months as the company formed. Shareholders that got involved in have had an excellent return. They've been paid dividends. They've seen the stock price go up. They've been able to sell if they like, buy back in. It's been a truly remarkable growth story, all on the back of a rising gold market. And today I want to tell you about a similar opportunity. In fact, it's far less risky and it's just as exciting. But first, I'd like to explain a little bit about how I ended up here. Many of you have seen me in the newsletter business. I wrote Doug Casey's newsletter for a number of years. Same for Bill Bonner and many other different iconic newsletters around North America. But now I've retired from that business and I'm a director of Metalla Royalty and Streaming. I started out in this business before writing newsletters, managing a gold stock fund with a guy named Brett Heath. We were long-term friends. We knew the gold business like the back of our hand, and we worked really hard for our clients to buy the best mining stocks. And all the time when we were doing our research, we would always notice that there was a little royalty on many of these mines. And regardless of how good things got in the mining business, this royalty holder always got paid this amount of money every quarter, every month, every year, whatever the frequency was. We somewhat envied this person or this entity. And so we decided to start one of these companies. And you've got to pay attention to the story behind Metalla to understand that the royalty business is not what you think. This is not something where we go and give lots of money to junior mining companies so that they can drill holes in the ground and take expensive trips, business class, to conferences all over the world. This is a situation where we go to royalty owners and we say, please trade your royalty into our company for stock and become part of this. We've got 50 royalties. We've got royalties on Pan American Silver, Agnico Eagle, Barrick Gold, Newmont Gold Corp. These are first-rate, top-tier companies. These are not the kind of companies that need a few $1,000,000 to put another hole in the ground. How have we done this? Well, the secret is in my friend and my business partner and my CEO, Brett Heath. Brett's going to talk to you about the structure and the formation behind Metalla after I sign off from this message. As he's describing this, I want you to see that the message I told you 4 years ago has come true, and it's actually getting better today than the opportunity was back then. I know that's hard to believe, because if you look at a stock chart of Metalla, it started here and it's run up like this. But if you compare that to a company like Franco-Nevada, who was in exactly the same business that we were 25, 30 years ago, Franco's chart continued going up. And when you lay Metallas over it, we're just getting started. Started from a very small market cap and today is maybe 250 to 300 million. And there's a long way to go because believe me, it's so much more fun to build a royalty company from 50 royalties on than it is to start at zero. So today you have the chance to hear right from the horse's mouth exactly how this company was put together and what's ahead for the future. Brett's not going to hold back. He's going to tell you the secret sauce behind this business, and you're going to have everything you need to know to have a new look on the royalty business. But one quick thing, it's very important to realize that gold is heading towards $1,900 this year. Now, that's not just something I'm telling you in the summertime with 6 months of the year already gone by. It's something that I wrote about in my book, This Year, Why Gold, Why Now, which you may have seen me talk about on Kitco and other channels. It's available on Amazon. In this book, you get the entire story of how I got into the gold business, how I learned everything that I've shared with you over the years in newsletters, on interviews and podcasts and in person, how I met Brett Heath, which is a fascinating story, and why we put together Metalla. You don't just hear a pitch about a company. You can get that anywhere, but you get to see how two guys built the company that they could never find in the public markets. And today, you can buy that company and take the rest of the ride with us. So let me turn things over to Brett Heath, and I hope to see you all again in person soon.
Good morning and good afternoon, Sprott clients. And thank you, E.B. Tucker, for that great introduction. Always good to have your take on gold, and congrats on the new book. I would like just to thank everyone for coming by our virtual booth today. I know it's a bit different than our normal conference, and this conference is actually very close to home, being our first conference we ever did as a new royalty company about 4 years ago. So we've got lots of in store for you today. We've had a lot going on the acquisition front. We're really excited about the future and what it brings, and really kind of the strength of what we've been able to build as we move into this next, really what I think is really the second phase of this company's life cycle. It took quite a bit of time to get through 17 transactions, and I'd like to quickly just bring this up. I know that a lot of you are very familiar with our company, our business model, and what we've been able to do, but sometimes it is good just to take a step back and really understand what we've been able to accomplish here. And as I come through our presentation, I'd like to get to page 7. And this really summarizes what we've been able to do for shareholders: being disciplined, being focused, and executing on exactly what we set out to do. And and I've said this before, when we started this company, very few people got it. A lot of the Sprott clients did, and they got in early, and they've been rewarded for it, and we're very happy. And a lot of them are still shareholders today, and we think will continue to be shareholders tomorrow. But we saw an opportunity to capitalize on a part of this royalty business that really has never been done before. And as you know, from if anyone's listened to any of my previous presentations, royalties are just the most phenomenal financial instruments you'll ever come across. They give you a non-dilutive interest that's free carried into perpetuity. And once these assets are in production, it's top line cash flow right off the top. There's nothing that I've ever come across that even remotely stacks up to this type of structure. And when you combine that with a laser focused business model, with an extremely skilled technical team and deal making team, you get 17 transactions. We've deployed upwards of almost $100 million now across 49 different royalties. And these are high quality assets. These are assets that we're experiencing a ton of growth on. We're experiencing a huge amount of exploration success. And again, that goes back to our business model and kind of what we're doing and how we execute, and making sure that when we buy these assets, they have all of these different attributes that really we believe are going to drive a huge amount of shareholder value in the future. To take just a quick step back on a case study, I definitely would like to go through our latest transaction. This transaction was royalty on the Wharf mine. So this mine has been in production for almost 3 decades. Just a truly incredible asset. And a lot of people don't know this, but it was actually one of the first, or really was the first operating mine that Rob McEwen bought to build Goldcorp. He leveraged this asset to build Goldcorp, to buy Red Lake. And fast forward a decade, almost a decade and a half, Goldcorp grows out of the asset. Core picks it up for just under $100 million, and it's been one of their most profitable assets since they've bought it, from a cash flow percentage basis, from internal rate of return basis. It's just a great asset. It's in the United States. It's in production, and for us, this royalty pays monthly. So it did one really important thing for us. It gave us a much longer life royalty that's cash flowing today. It fills the gap that we were looking to replace from Endeavor. It's in the safest jurisdiction you can be, really, in the United States. And it's got a solid counterparty with decades of exposure. So Cortes was another recent transaction that I'd like to share with you. We were incredibly happy to get this royalty and partner with these holders. The original prospector that owned this royalty was the original prospector that staked the entire Cortes trend. Again, this has been one of the most prolific trends in the world in the gold business. We've seen well over 50 million ounces come out of really just a very small area of Nevada. And we think there's more. In fact, we think there is a lot more. And we want to position our shareholders to have this types of optionality. We believe that this is why royalty companies trade at premiums against mining companies, and this is why royalty companies can have such a significant attractive growth profile as you grow the portfolio and you've got more and more of these types of transactions. But this was definitely a unique one. We picked up two royalties that cover 190 square kilometers across this Cortes trend, and what it was 190 square kilometers to the southeast of where all of the existing mines are within Cortes. Now, this is a joint venture now between Newmont and Barrick. It's called Nevada Gold Mines. As a company, the joint venture is the largest gold producer in the world. It's a massive operation, and really it backs up against what we think has a very high probability of being the largest gold mine on the planet. And what I'm talking about is Gold Rush and 4 Mile. They have had a huge amount of success on understanding how the geology and the stratigraphic structure host this type of mineralization, host these not multi-million ounces, but 10, 20 plus million ounces. We think that between Gold Rush and 4 Mile and the new discovery that they've just made along this trend is likely to be 30, 40 million ounces of gold. And the royalty that we picked up backs up right against this structure. And in fact, the southern portion, called Gold Rush South, actually extends on to the royalty claims that we just picked up. And there are no defined mineral reserves or resources that are publicly stated, but there were some very significant mineral intersections on Gold Rush South. And what we do know is that the reason why they stopped drilling Gold Rush South was because of the discovery of 4 Mile. And they reallocated the drill rigs internally and had a new focus. But we do know that they will be completing an exploration decline towards the end of this year. And likely they'll be doing some infill drilling on Gold Rush first. But shortly after that, Gold Rush South will be a target. But most importantly, what we were able to figure out were there were actually 2 additional structures. These are stratigraphic structures that host these massive deposits in Nevada. And there was an additional one that was identified, we believe, on the Anglo-Zeke claims, and then a smaller junior company called New Legacy Gold also identified the same type of structure. And these structures are a bit of a new phenomenon for Nevada. They're under 300 plus meters of volcanics. You can't find these types of deposits the way that you specifically have done in the past, using the same type of technical programs to be able to find little sniffs here and there. Really you have to understand from the larger, really a bigger picture of what's going on from a geographical standpoint or a geological standpoint as well. And so that's what they've been able to find. They've been able to find two more of these structures. We believe that both of them will be drilled out over the next 12 to 24 months. And given where we are, given how we've seen really this trend progress consistently to the southeast, this puts us in Metalla shareholders in position to have that type of optionality that we're looking at. Picking up an area or royalty coverage that is 4 times the size of Manhattan. Truly just an incredible amount of coverage in ground zero. This is between Park Place and Boardwalk. You cannot get a better position in Nevada in one of the most prolific gold trends. And this is what we want to give our shareholders. This is what gets us excited about building this company and looking at it from a long-term view and really bringing in the high quality and also the optionality that is needed to really set us up for success. And so we're really happy we got this project, and we're looking for a lot more, and I think we'll be successful. So in conclusion, I really would like to stress to all the investors out there to understand kind of really where we are from a company's perspective. We've been able to build a portfolio now, again, 49, upwards of almost 50 royalties. We have the critical mass. We've built the foundation, and we're looking to scale it up from here. And we feel that that our business model and really our relationships that we have with the third-party market are incredibly strong. We feel that we have just a material advantage, as you've seen on just the last 3 transactions that we've completed, with some of the most valuable royalty holders that are in this existing market that we target. The IRC transaction, that royalty was held since inception, over 30 years. The Wharf transaction, that was the original royalty holder, again, over since the 1970s, that royalty was held. The Nueva Union royalty transaction on one of the largest copper gold development projects on the planet. This is a Tech Newmont JV. We acquired that transaction back in February of this year. And that as well was a royalty holder, original royalty holder that goes back to the 1990s. And so as you look forward, we are confident based on our pipeline, based on our relationships, that we think we're going to grow this portfolio to well over 100 royalties over the next few years. And I think it's going to happen as we see the types of assets that we buy become more and more strategic. We're always going to bring in smaller ones that we like here and there that are not really going to end up being cornerstone assets, but most importantly, they're going to add value on a per share basis. And every single transaction that we do needs to add value on a per share basis, whatever metrics apply for that acquisition. And, we've been able to do that. We've been able to do that going on 4 years. We've been able to generate, I believe, well over $200 million of accretive value for you guys. And I think we're going to continue to do it. I think that the portfolio is going to continue to be a very nice, even, steady growth profile. I think we've built up one of the most robust development pipelines. And this is really the key thing for investors to understand here when they're investing in royalty companies, is that in bull markets, the mining companies, they don't need royalty and streaming capital. They just don't need it. Their equities, we're already seeing this today. This is happening now. As we speak, as you are watching this, the deal flow for the majority of the royalty and streaming companies out there in the precious metals market is really drying up. And when we're targeting existing holders, these holders still need the liquidity. They still need the diversification. They still want exposure to the public market multiples. And in fact, we're even seeing more of an eagerness for them to transact because they don't want to miss out on another cycle. It may be who knows how long for that next cycle. We experienced one in 2009 to 2011, and there was quite a long bear market in between. Those were some really tough years. And so looking at it, looking how our business is shaping up, looking at the transactions and the opportunities that we have in front of us, some of them that we weren't even able to transact on because of size. Now we're a much bigger company. We've grown this from a shell with no assets and no cash all the way up to a company that's currently today, been between 250 and 300 million market cap. Like I said, the development pipeline is not only set to spin off a huge amount of free cash in the future, but also provide an enormous amount of growth internally as these projects are drilled by the operators, as the operators spend hundreds of millions of dollars doing that work, expanding those reserves, putting together the mine plans, and spending all of the CapEx to build these assets and bring them into production for your benefit. And it's truly remarkable to see. We've already seen a couple of our development assets, the two Pan American silver ones, go from development to production. We have, again, I believe one of the most robust pipelines out of our peer group, and we're excited about how we're going to fill that in even further in the future. And we are confident that we'll be able to execute on that. So thank you for coming by our first Sprott virtual conference, our first virtual booth. If you've been a shareholder, thank you very much for your support, and we're working hard to continue to create a larger gain for you in the future. And if you've taken profits, it might not be the worst idea to take another look at Metalla. Again, I think we're at the beginning of our second phase, and if you invested in the beginning of our first phase till now, you did very well. And I think the same thing's going to happen. I think the same opportunity that was 4 years ago, if you didn't invest 4 years ago when we started this company, now is the time that you can get back in really at the beginning of this next transition. And so, we'd love to have you back. And we, again, love all the support and all the Sprott clients, and being very keen early investors, objective thinkers. These are the types of shareholders that we want. So we thank you, and thank you for your time and listening to our presentation.